Hi everyone, this is Mario, CEO of Fullerton Markets and author of the best-selling book, Unlocking the World's Largest Financial Secret. A very warm welcome to today's webinar. I decided to take this webinar personally myself because, well, those of you who have been reading the news, well, obviously the biggest news for this week and quite arguably the biggest news of 2016 in the financial markets will be the election of the U.S. elections, right? Where the U.S. will see either Donald Trump or Hillary Clinton making history as the next U.S. president. So before we start, if you guys can hear me all right, just type quickly into the what do you call that box that you have, all right? And just give me a quick yes or give me a thumbs up so that I know you guys are hearing me all right. Okay, fantastic. I'm seeing a lot of yeses coming in. Thank you so much as you guys are joining me. So let me just chat for maybe a minute for those of you who are hearing me for the very first time. We conduct this webinar basically every Monday at 8 p.m. 8 p.m. meaning GMT plus 8 time zone, all right? So this webinar is exclusive for all Fullerton Markets clients. One of the things that I want to do is to ensure that we all raise our standards when it comes to trading competence and trading capabilities. This is one of the ways that I've been taught over the years through some of my earlier mentors, that we need to get a good grasp of both the fundamental news and the technical applications when we are actually trading the forex markets. All right, so this is something I hope to do for you. Every Monday is being headed by either my head of research, his name is Wayne, or his coaching team. But as I mentioned today, I would like to handle this one personally myself. All right, so we'll go through about 3 to 4 sessions of the webinar. Please feel free to take notes as I speak. Sometimes I may go a little bit off track, but I just do hope to add more value to all of you. All right. So what we will cover essentially are 3 parts. The first portion, I'm going to talk a little bit about news. Now, because the webinar is only done once every week, which is essentially every Monday. So the days from Tuesday to Friday, you may have missed out some of the news. So I'll probably spend about 5 to 7 minutes covering like what happened last week. No doubt it may be over already, but as I speak, it may add a lot of value to you so that you understand how markets are basically pricing in some of the news that is coming out. All right. And once you understand that, you are in a better position for you to take future trades for yourself. Okay, so this is point 1. I will be basically covering what news happened last week, some of the major news. I will be covering what news basically is the hot topic for this week. And essentially that is only the US election. I think we'll just focus on that, okay? What is about to happen if Hillary wins and what will happen if Donald Trump wins. And then we will go through some of the key news that may be coming out this week, some of the economic indicators. Just for you to take note, one of the key things that you can be trading would be the New Zealand interest rate, okay? So I'll be covering that later towards the end of the webinar. And of course, right at the end would be a time for you guys to ask me questions so that you know this is a live webinar. In fact, you can essentially start typing the questions in the comment box already. So when I see the questions and if I feel it's relevant at a point of time, I will answer it immediately. Okay, so have your questions come out. Oh, I'm so sorry. I think I missed out the most important part, which is essentially we will trade live. So, you know, we've rebranded the webinars to a series called Let's Trade Live. So we'll be going to the charts to look at some of the currency pairs to see if there are any opportunities for you and I to be making some money this week. Okay, so this is the weekly market outlook. Let's trade live on 7 November 2016. Now, the first 4 or 5 slides, if you can see it on your screen, I'll basically be covering what happened last week. So this is one of the first news, all right? Now, I took this off BBC, so you'll see the headline, Brexit court defeat for UK government. Now, you don't have to basically read the entire article. Just pay attention to what I'm about to share with you to give you a summary of what this is about. Okay? So what happened last week was essentially this. Now, there was a group of anti-Brexit campaigners Meaning to say, there was a group of people who didn't want Brexit to go through. So what exactly happened? This group banded together and they essentially said that, the new PM can't just trigger Article 50, which is basically a treaty to say that the UK will formally exit the EU. All right. So this campaigner said that the new PM, Theresa May, she cannot trigger Article 50 without the consent of Parliament. And the Prime Minister, Theresa May, said, no, we don't need to have Parliament to vote. We don't need the MPs to vote simply because the people have already mentioned it during the referendum that they want to exit. Well, as you can imagine, the entire case went to court, all right, which is, that's what it is. So the High Court essentially, so listen to the ruling, okay? The judges of the High Court, they have basically ruled and sided with the anti-Brexit campaigners. So essentially what they are saying is that Parliament has to vote. Now, Theresa May and her team will obviously contest that. And I think, if I'm not wrong, the appeal is going to be next month, either on the 7th or the 8th, basically the first week of December. So what this is happening is essentially saying that, well, the ruling government says we don't need Parliament or the MPs to vote simply because the referendum has already been passed. But this group of anti-Brexit campaigners, they are basically saying, well, the Parliament has to vote. And the High Court has actually ruled in that favor to say that they have to vote. So we are now in a deadlock situation. I will update everybody what happens in exactly a month from now, once they are appealing. The second report that you will see, so this is taken from Bloomberg. It says, Carney says BOE. Now, BOE stands for the Bank of England. BOE could move either way as inflation picks up. Now, as a trader, don't you just hate this sentence? Each time any central banker would say it could move either way. It brings me back to my earlier days when one of my earlier mentors, right, they said, Mario, when you are on CNBC or Bloomberg or any one of those major financial news, right, if you don't know what to say, if any of the TV anchors were to ask you, Mario, so where do you think the pound is going to go? Where do you think the Aussie is going to go, right? And they taught me this very valuable lesson, friends. I'm going to teach you today for free. Listen to this. If you don't know where it's going to go, right, all you have to do to sound smart is to essentially say, I am cautiously optimistic about the Aussie dollar. All right? Friends, I'm teaching you these two words. I'm cautiously optimistic about the Aussie dollar, or whatever currency pair that you're thinking of. What is the brilliance of these two words, cautiously optimistic, right? Well, essentially, you're covering your ass in both ways. When you say you're cautious, meaning to say, well, you don't really think it's going to run. You don't really think it's going to trend upwards. But when you combine it with the word optimistic, and now you put in a word to say you are cautiously optimistic, right? Well, it could basically go either way. And most traders hate to hear that, all right? So this is something that Mark Carney, who is the head of the BOE, has actually mentioned. It could go either way. Now, friends, let me give you a bit more information about how central bankers create policies, okay? I do this not in the hope that you'll be a politician one day, but in the hope that when you have this added knowledge, it can really help you to put yourself in prime position to earn some pips from the Forex market. Okay? Now pay attention to this. Stop surfing Facebook and listen to me for a while. Whenever central bankers, when they are in a position to either raise interest rates or lower interest rates, it has got one, they look at one factor. And that factor is essentially, what is the level of inflation? Okay, pay attention. So, I'll bring you through the entire process. It's not complicated. After this, I promise you'll be an expert. If inflation numbers are high, chances are they are going to raise interest rates. Now, sometimes policymakers will use the words tighten monetary policy. Okay, so when you hear the words tighten monetary policy, it basically means that they are going to be raising interest rates. Now, if you are a trader, which I assume all the few hundred of you who are logging in, all of you are, if you are a trader and you hear a central bank saying things like, we would be tightening monetary policy soon, it essentially means that they're going to be raising interest rates. Now, that is good if you're an analyst, but you and I are traders, right? So whenever a central bank says that, the next most important effect is that the currency tends to strengthen. Because when you raise interest rates, either from 0.25% to maybe say 0.5%, right? What tends to happen is that money from external areas tend to flow into that particular country to earn the additional yield, in which case it pushes the currency stronger. Now, even if you don't want to understand what is the effect, I'm here to tell you, if most central bankers, if they use the words, we are here to tighten monetary policy, it basically means that the currency will strengthen. Your job is to go long. Now, if you look at the reverse, right, if they say, oh, we want to weaken, monetary policy, then essentially what it means is the exact reverse, that they will be cutting interest rates. And they tend to do that, when inflation is low. So when inflation is low, they tend to drop interest rates in the hope of making money more cheaper to the entire public, all right? So hoping that, people will not be saving, they will be taking out money, they'll be spending money in the hope of reviving inflation all over again. So this is the main basis of what central banks do, okay? I know I spent a bit more time talking about this because I just want to add a bit more information to you. So when it comes to England again, I think I want to maybe spend a couple more minutes talking about UK because, well, every one of you know that besides the US election, one of the major things that happened this year on the 23rd of June was essentially Brexit, right? When the UK has mentioned that they're going to get out. So sometimes, friends, I know many of you are technical traders and that's great. If you're making money with it, continue to do that. If some of you want to understand more about fundamentals, this is really the right place to do it. Let me give you an example, okay, pure example. If you look at the pound dollar, okay, someone is asking, Mario, are the slides moving? No, the answer is not. Okay, so it's still at the Carney says BOE could move either way. This is an example of me going, a little bit more in detail, but I have not moved the slide, so not to worry. So just pay attention for a while. If you look at the pound dollar from the start of this year, okay, in January, it has dropped from 1.52, and today is about, say, 1.22, right? So it has dropped 3,000 pips, in this entire year. And that's the beauty of it, friends. If you had done a short on that, it would have netted you a cool 30,000 US dollars by shorting the British pound. Okay, the last time the UK has basically cut interest rates, if I'm not wrong, was in August. I think this was like maybe the 4th of August, okay? Maybe about, say, 3 months ago. They cut interest rates from 0.5% to about 0.25%, which essentially pushed the pound dollar even lower. Okay? So that's a little bit about the pound dollar. Now, just maybe one last point before I move on to the next slide. This year, right, when Mark Carney says it can basically go either way, he's obviously looking at the inflation rate. So this entire year, the inflation for the pound, for the entire UK economy is about 1.3%. But because the pound is so low, listen to this, there's a high chance that next year, inflation could actually shoot up. What is the reason for that? And I'm here to tell you the reason, okay? Whenever a currency is weak, what is going to happen is that it's going to affect their imports. Meaning to say, when you import, other stuff coming into the UK, you end up paying a bit more. So the term that most analysts would use is the word imported inflation. Now, because of this, because the currency is weak, and when they start to import stuff into the UK, it is basically going to make the stuff a bit more expensive. So because of that, inflation could actually double in the year 2017. So just take note of that. Because of inflation, the pound might start to rise. So pay attention to the inflation numbers that's coming out of the UK. Okay? All right. Now we'll move on to the next slide. So this slide basically talks about what happened last week. Now, again, if you look at the headline, so this is from Reuters, stocks and the dollar slipped on US election worries. The main reason last week as to why the stocks and the US dollar would start to drop is that they were pricing in that Donald Trump might win. So this is how the markets are treating the election. So this is what you want to frame up in your mind right now. If Hillary Clinton wins, there's going to be a slight rally on the dollar. It's not going to be a big uptrend. It's going to be a slight rally only because her victory has actually been priced in. Priced in meaning to say people are already expecting that she might win. So last week, right, the only reason why the dollar slipped is that because the markets suddenly were feeling that, hey, Donald Trump could win. And, the US dollar, if they have a feeling that Donald Trump will win, and this has been happening consistently over the last 1 month, the US dollar will actually fall. A few reasons for that. Number one, Trump is not really a person who understands policy. He's not really a politician. That's point number one. Point number two, markets don't really like changes in incumbents. Now, meaning to say, right, Hillary Clinton is a Democrat. Obama, her predecessor, or the current president, is a Democrat. So if Hillary takes over, then chances are there's not going to be a lot of differences between Democratic policies, right? But if Trump wins, and he's a Republican, then there's a high chance that so many policies would change, right? Whether or not he's going to lower taxes, whether he's going to build a wall here and there, many policies will change. So because of that, chances are the country's currency will actually drop if Trump will win. So this is that is what happened last week, and I'm going to talk a little bit about what happened this week. But prior to that, just one more slide from Bloomberg. Fed sets up move in December while leaving rates on hold. So recently, they kept rates on hold, but I'm for the opinion that before the year is up, the Federal Reserve will actually start to raise rates a little bit. You know, in the entire major currencies, the Japanese yen and the Swiss franc are currently at negative yield, right? At negative interest rates. The UK is about 0.25%. The US is anywhere between 0.25 to 0.5%. So I'm for the opinion that, whatever happens in the election, during the last FOMC meeting at the end of the year, there's a high chance that the Fed will actually raise interest rates. And if they were to do that, then the US dollar will rally. Rally meaning to say what you need to do is to long dollar yen or to short the euro dollar. Okay? So just pay attention to that. The big news of last week was the non-farm payrolls. All right, the non-farm payrolls. Now, the non-farm payrolls is arguably the most important news that comes out every single month. So what happened on Friday was that the number of people that were hired was basically 161,000. So let me give you a snapshot. Is this good or bad? What are we to expect? Understand this, that in September, the number was 191,000. So if you compare September's numbers, 191,000, October's numbers, 161,000, it is basically a drop. In fact, it didn't even meet last month's numbers. It didn't even meet the median forecast of about 173,000. Okay? But having said that, there is a positive vibe about the US in terms of the numbers that are climbing, in terms of their inflation. Inflation is actually heading towards 2%. This number 2% is the basic goal of most major central banks. Most major central banks, whether is it the US, whether is it UK, whether is it Japan, they're all trying to hit inflation target of about 2%. So for the US, their inflation, from January to about September, October this year, their inflation numbers are, thereabouts 1.7%, which is high. But I'm here to tell you, because I tend to dig deeper into these things. Is their inflation really that high? Well, the answer is yes, but it's only a half truth. So listen to this, okay? The US inflation is at about 1.7% only if you were to remove the two core ingredients in their inflation numbers, and the two core ingredients are food and energy. So if you remove food and energy, then yes, inflation is looking at about 1.7%. So this is a little bit of window dressing. So Well, but it is what it is. So core inflation without food and without energy is at about 1.7%. Well, still slightly higher than most other major markets. So for me, after talking all of that, it's always, Mario, what's the point, right? So what are you trying to get at? I'm trying to get at towards the end of the year, which is another month and a half. There's a high chance the US would raise rates. If they do that, US dollar will strengthen, short the euro dollar or long the dollar yen. All right. Okay, so this is the major news this week. As most of you would know, Hillary was actually, well, the FBI has essentially opened up a new case against her. So this was last week, right? So the head of the FBI, James Comey, he has basically said, well, we have found no charges on Hillary Clinton. And this is assuming that they literally went through 650,000 emails in 8 days. Whether that is humanly possible or not, I have no idea. I'm not a US politician. But the most important thing for this week, right, is that there are no more charges on Hillary Clinton, in which case, the US dollar has actually had a bit of a rebound from last week. So it's a bit of a roller coaster ride. Some of you may have seen certain market gappings in the morning when markets open, but that's just the way it is. When news hits the wire, certain banks, they won't be pricing in certain things. They won't be giving you pricing at certain levels. That's why you see gaps. So this is for this week heading into the US election. There are no more charges that is being brought to Hillary Clinton, in which case the dollar had a bit of a brief rally. Okay. Now, let me jump straight into the economic indicators that you can be looking at for this week, for some of you that trade the news. Now, whether or not you trade the news, friends, so let me give you an example. The screen is taken from fxstreet.com. What I do want to tell you is this, okay? If you have found a good technical strategy, and some of you may say, Mario, I don't trade the news, then by all means, do not start trading the news. I'm a very practical person, okay? If whatever you are doing and you're making money, then just do that. But I want you to utilize news to tell yourself when not to enter the market. You may have found your groove in terms of trading with technical strategies without trading news, but I still want you to be aware of news so that you do not enter your technical trades during news releases. All right, I hope that makes sense. So for this particular slide, I think I have 3 slides for this. So for this particular slide, if you look at the left-hand side, just to orientate you on the timings, the timings are on GMT time zone, meaning to say it's UK time. So if you are in the GMT plus 8 time zone or any other time zone, you just adjust it accordingly. Let me give you an example, okay? If you see on Tuesday, all right? If you see Tuesday, the 3rd column, which says 0200 hours at 2 a.m., CNY exports year on year in October. So if you are from Singapore, Malaysia, Philippines, Beijing, Hong Kong, the GMT plus 8 time zone, then you just need to add 8 hours, okay? So that means this will happen tomorrow morning at 10 a.m. That's how I wanted to orientate the numbers. So the numbers on the rightmost column, minus 10%, that is the previous month. Minus 6% is the forecasted figure. And what will happen at 10 a.m. tomorrow on GMT plus 8 time zone, it will be what is the true number. So the next question, the next most practical question is this, that many people will ask me, Mario, so how then do we really trade the news, right? You see, the forecasted number is basically what most people would see now. Most people will see that as minus 6%. But the number to really pay attention to is the actual number, okay? And I'll go so far as to tell you that if the actual number comes out at minus 6%, meaning to say it is the same number as the expected number, then essentially you might not see a lot of movement. You won't see a lot of drop in the currency. Now, although you may say, Mario, it has the number is still dropped, right? But why is it that you hardly see any movement? And the answer really, there isn't a big move or a big change from the expected number and the actual number. Okay, so I want you to understand that whenever the forecasted numbers come on, that movement tends to be priced into the market. All right, so what traders will, or rather what the institutional traders will trade, is essentially the differential between the actual figure and the forecasted figure. Now, one more point before I forget. In terms of the CNY, it has weakened recently because the government has loosened or weakened the reference point a little bit. So you can read a bit about that. But more practical is that both you and I cannot trade the renminbi. Now, we can't because it's not a freely floated currency in the market at this point of time. What you can do, you and I, you can trade the proxy currency. So whenever when I use the word proxy currency, the proxy currency for the Chinese renminbi, right, is the Australian dollar. Why? Because China is still considered Australia's largest trading partner. So whenever China has big numbers or China tends to do well, you'll start to see Australia's currency start to strengthen. Why? Because China is still, whenever they have good numbers, right, the next tendency is that they would tend to import a lot of raw materials from Australia. So they kind of move in tandem. When China has good numbers, you tend to see the Aussie dollar go up. When China has bad numbers, you then tend to see the Aussie dollar start to head downwards. Okay, so that's a little bit of a trick on how you can trade on the Aussie dollar by looking at China's numbers. Looking at the next one, on Wednesday, the 9th of November, you just need to pay attention to essentially one which I feel is worth trading. Okay, this is the New Zealand interest rate decision. Now, what you will notice is that the previous figure is 2%. Okay, forecasted figure is at 1.75. Now, even if, right, so this is going to happen Wednesday 8 p.m. on GMT time zone. So on the GMT plus 8 time zone, it will be Thursday morning at 4 a.m. Okay, so Thursday morning at 4 a.m. that is going to be released. Now, even if, friends, listen to this, even if the number comes in at 1.75%, I would go so far as to tell you that the Kiwi dollar will drop. So, for those of you who are either sleeping late or you're waking up early, if the release comes out at 1.75%, you can take a short on the Kiwi dollar because the immediate tendency would be for the Kiwi dollar to weaken. Okay, so that would be one news to look at. The last slide, basically on Thursday or Friday, most of them are medium impact, whether it is initial jobless claims in the US or the monthly budget statement. I tend to want to look at the business NZ PMI. All right, and the main reason for that is because, the end of this week, I'm flying back to New Zealand, basically to check out our company to see that everything's in order. So I'm making a trip to New Zealand. At the end, basically on Sunday evening, just to take an overnight flight, reach there on Monday morning. Okay, so these are things that you can be looking out for when you're trading the news. So bear in mind, friends, my biggest note or my biggest advice is this: if you are a technical trader and you don't trade the news, basically still utilize the news to tell you when not to enter the market, so that you don't experience all the gyrations or all that volatility that could potentially hit your stop losses. Okay, if you want to start to learn how to be a news trader, by all means I welcome you to do that, because some of you may want to trade a bit more short term. In a case, if you guys want to be trading the news, then drop your time frame to either M15 or M30, so that you can take advantage of potential breakouts from resistance or support levels. Okay, so I hope you guys enjoyed that segment on the news. Now let's go to the charts. So that's Mr. Pip right there. Let's go to the charts and essentially see if we can basically have have some trades. Okay, so I'm gonna run through a couple of trades that we gave out, I think, for this week during our weekly newsletter. If you guys are not signed up, so please open up an account on Fullerton Markets. You'll get the research for free. So This is the first one. Well, this was basically on my own site. So if you guys follow my fan page, right, on Mario Singh fan page, where I basically give out a trade call every Monday. So this is a trade call on Euro Pound. You know, I mentioned to short. So essentially we are already in the trade. So this is Euro Pound on H1. And you notice the red line over there. So the red line, I put it as a as the level of resistance. So level of resistance was about, say, 0.8925. Okay, so that's a level of resistance. And notice this tail over here. All right, this is this tail, which essentially means that it is a false break. Okay, so on a false break, it kind of tells me that the downward momentum is a little bit stronger. Prices, or rather the bulls, lost a session, the bears won. They didn't really try to break out. It didn't fully break out and close above the resistance level. So essentially I took an entry price on 0.8918. Okay, 0.8918. I have a stop loss just above the tail. So that is at 0.8943. And essentially a profit target of 0.8894. Yep. So this is what we would term it as a 1-to-1 risk to reward ratio. Okay, about 25 pips either way. Okay. So this is a trade on the Euro Pound. If you had entered when I gave the call at 0.8918, you are essentially about 10-11 pips in the money already. Now, let's look at the next trade call. So this one was essentially part of the weekly research that we sent out to all our clients. This was the Pound Aussie H4. All right, so every candle is a 4-hourly candle. The previous one was a 1-hour candle. So for Pound Aussie, I put that as H4. Now, notice that I drew a line at 1.6100. So this is what we, you know, in the trading world, we call it a round number, 1.61. So that is essentially where, if you will notice, right, let me draw the crosshair. So on the, basically on the chart, right, 1.6100 is what I would term as a big round number. And this is a level of conversion. Now, some of you have probably heard me use this word many times, but if you're listening to me for the first time, right, this level is a very interesting level because you would notice that at some points, 1.6100 acted as a level of support. You know, at some levels, it acted as a level of resistance. And what is more interesting is that recently it broke out of 1.61, came back down to just about 1.61, as you would notice, and it is now starting to head up again. So this is a very important level, and that's the reason why I call it a level of conversion. Conversion meaning to say it is a level where resistance turns to support. So this is a clue for you and I, if you are a technical trader, right? And I always say that, you know, the charts are telling you a story. What story are they trying to tell you right now? Well, it's basically trying to tell you that prices did not manage to break below 1.61. So as it started to bounce up from 1.61, you are basically able to take a long trade. All right. If you are, and even if you enter now, right, which is not a problem at all. If you take a long trade, you can basically take up to 50 to 70 pips. All right, 50 to 70 pips. And you can put your stop loss just below the level of 1.61. And the main reason for that is that I feel prices will not drop below 1.61 again. You know, it's starting to move upwards after it has bounced up from the support level. Okay, so this is a chart of the Pound Aussie. I'm trying to do a little bit of a different time frame for you guys. Okay, so this is now a chart of the euro dollar on the daily chart. Okay, essentially on the daily chart. Now, you will notice that on the daily chart, it is respecting this downtrend. I drew basically two lines there to make it look like a little wedge. Okay, And it basically hasn't broken above 1.11, the current daily candle. You'll notice there's a tail, right, that kind of like peaked above 1.11, but obviously didn't really close above it, and prices are now hovering about 1.1068. Okay, so the downtrend is a little what's the word? The downtrend is a little confirmed, but I'll be a bit cautious trading the US dollar for this week, simply because of what is going to be happening on the US election side. But if you are taking a daily trade like this, and this is where a bit of my opinion comes in, then you shouldn't be too, shouldn't be too short term in your thinking. If you look at a daily chart, then in terms of pricing the chart, right, the euro dollar, you should be looking anywhere between 1 to 2 weeks. But for me, in this particular case, right, I'm going to show you exactly what's going to happen if Trump wins and if Hillary wins. Now, if you are paying attention just now, write this down in case you forgot. If Trump were to win, the dollar will essentially crash. Well, it won't crash, it will drop heavily. So if the dollar drops heavily, right, you will start to see the euro dollar tend to spike all the way. It could go all the way to maybe say 1.15. Anywhere from now to about 500 pips up. All right, if Trump wins. And the reverse would happen if Hillary were to win. If Hillary were to win, prices would be anywhere from say 1.10, which is about now, to anywhere to say 1.08, 1.09. The additional increase or the additional strength in the US dollar won't be as much as the drop in US dollar if Trump were to win. And the reason for that is because markets are pricing in the fact that Hillary would actually win the election 2 days from now when the results actually come out. Okay. A little bit on the euro yen. So this is I drew a support level about 112.40. Prices are starting to hit upwards. So what am I looking at now? Okay, let me draw another line for you. I don't know if you can see this red line. I hope you can. So I'm basically drawing another line. So this is a resistance line. The resistance is now at about 1.1632. Okay. If you are trading the daily chart, then now it is heading upwards towards resistance. I want you to do two things. So this is how you are allowing the chart to tell you the story, okay? You can do one of two things. The only thing to do now is to wait for the euro yen. If the candles were to break above the resistance, and if it closes above means the closing price is anywhere above 1.1636. So let's just say if it closes at maybe 1.1692 as an example, then at the opening of the next candle, you can go long. This is not a guaranteed thing, friends, but most of the time, when candles pierce through a level of resistance and it closes above the level of resistance, you can then start to go long. Okay? When would you go short? Well, good question. Now, if this current candle, if it touches your level of resistance and starts to turn down meaning to say if the candle closes and it becomes black, a black candle means that the closing prices were lower than the opening price. If you see prices start to head towards the resistance level, all right, of 1.1636 and start to head downwards, so let's just say maybe it closes at 1.1546 as an example. You can then take short on that 1.1546. You can take about 50 pips and you can place your stop loss above the current resistance level. So this is a pure technical trade. It is currently moving in a range between support and resistance, but moving more towards resistance. So pay attention to see how it would behave. If it closes above resistance, go long on the opening of the next candle. If it turns back down from resistance, then you can go short. Now let's look a little bit at the Kiwi dollar, okay? Now, Kiwi dollar is interesting because you're seeing, two tails of what I see there. So this would be a level of support. this would be your level of resistance. Okay, somewhere about here. Now, for the Kiwi dollar, as you can see, in terms of the story, so how is my mind processing this trade, right? It has gone up in a huge uptrend. So the uptrend has lasted maybe for about coming to 2 weeks now. It has moved a grand total of about 221 pips, from a level of about 0.7116 all the way to 0.7336. So that's a movement of about 220 pips. Now, after the uptrend, you will notice that it has failed to make a higher high. It hasn't broken above the resistance level. All right, resistance level is about 0.7333, okay? And now it is more or less in the middle of a range. Now, whenever prices are moving in the middle of a range, my take is to not to do anything. So you would obviously need a reason to trade the Kiwi dollar, right? And the reason, if you forgot, is basically going to happen on Thursday morning at about 4 a.m. So consider both sides, because this is a money-making opportunity for you and I. If the interest rates were to remain at 2%, chances are the Kiwi dollar would strengthen. Okay, listen to me. If the RBNZ, the central bank, if they were to say, once it's released, it remains at 2%, chances are the Kiwi dollar would strengthen. Why? Because the forecasted figure came in at 1.75%. That means people are expecting that they would cut 25 basis points to 1.75. So in the event that they don't, it means that the central bank feels there isn't a need to weaken the currency, in which case then the Kiwi dollar will start to hit upwards. All right, if that happens, if the figures come in at 2%, you can go long. Now, if the opposite happens, if they were to drop it from 2% to 1.75%, then by all means go short. Now, when you go short, you can do one of two things, okay? Number one, you can drop to a lower time frame, drop to a 15-minute time frame, the M15. You can take 30 pips and get out. Okay, that's one way to trade the interest rate release, the interest rate announcements on the major currency pairs. All right? So maybe we just do one or two more, and then we will go to the what do you call it? We will go to your Q&A. So here's an example of the dollar yen. All right, of the dollar yen, you will notice we have taken a sell trade. All right, a sell 5 lots on the dollar yen at the H4 mark. Okay, so what are the main reasons for that? Well, one of the main reasons for taking a short, if you notice there's a huge gap up, right, early this morning. So the momentum hasn't really been sustained. So this is a little bit of a momentum trade as well. That the huge upswing has not been what's the word? Has not been realized, or hasn't been sustained. The word is sustained. I'm looking for the word sustained. So this is a little bit of a momentum trade. All right. So we have taken a sell trade at, what's the price here? At about 1.0436. All right, it's about 1.0436, and then the stop loss is at about 1.0451. So it's a very strong risk to reward ratio. It's a bit speculative, this trade, okay? Notice that the stop loss is a bit tight, It's like what, 14, 15 pips, but we're trying to go for maybe a 50 pip, what do you call it? A 50 pip profit target. So there's a couple of reasons again why. Number one, it's a bit of a momentum trade, and number two, coming to a US election. So let's price in and talk a bit about the US election, okay? Chances are money will flow into safe haven currencies. Okay, so if we are shorting the dollar yen at this point, and I stress it's a little bit speculative at this point, 5 lots on the dollar yen. Well, chances are prior to an election, money tends to move into safe haven currencies. And the two strongest safe haven currencies are the Japanese yen and gold. So if I short the dollar yen now, it tells you two things. Number one, it tells me that I'm selling the US dollar and I'm buying Japanese yen. Now, in the currency market, our friends, the Japanese yen is always seen as a stronger safe haven currency compared to the US dollar. Okay, so I stress again, it's a bit of a speculative trade, but I'm taking this trade right now just to, just to see whether or not what I mentioned actually comes to pass, that more money tends to flow worldwide into a bit of a safe haven before the US election. Okay, so this is the dollar yen. Anything on gold? I'm opening up gold. Now for gold, I tend to look at either H1 or H4, So this is a picture of gold on H1. You will notice there's a beautiful double top that actually formed. Notice this, right? It's a bit of an M shape. It went up one time, came down, went up, found resistance at about the same point, and then start to drop a little bit again. Okay, so let me draw that for you. This is essentially the huge range that it is at. Okay, so this is H1, and now have a look at how it looks like on H4. Notice that on H4 it's still, prices are tending to go up, but it has basically broken a little bit below support. Now, I mentioned that prior to an election, right, that money tends to move into two safe haven currencies. So that will be either gold or the Japanese yen. So when I took a short on the dollar yen, I would not basically take a short on gold now. Because if I am using the mentality of money moving to safe havens, I would actually execute a long on gold. So at this point of time, what I would do for gold is to stay out, and basically just focus on the dollar yen trade to see where it's going to go. Both of them actually have the same repercussion. If you are trading safe haven, essentially you should be taking either one of two trades. You are either buying the Japanese yen or you are buying gold. All right? Okay, so these are the few trades, and let me just open up the comment box. Okay, I just want to check some of the questions that's coming in. Give me 1 second, friends, while I try to enlarge your box. This is Kirsten. I'm trying to look through some of your questions. How can we trade the silver and gold during this election? Yep. So, Kirsten, thank you for your question. So I hope I answered this. Essentially, right, pay attention to two things. Number one, prior to an election, money tends to flow to safe havens because they don't really know what's going to expect. But the actual results of it, right, what may happen if Donald Trump were to win. So now let's talk a little bit about the actual results. If Donald Trump wins, then the US dollar is going to fall. And when US dollar falls, gold actually shoots up. Here's an interesting part, okay, I want to share with all of you, is that if you look at a World Gold Council website, so I think their website is WGC.com. Either WGC.com or WGC.org, okay, I can't remember. Either one of it, just go to Google and type World Gold Council. It's actually stated on their website, right, that all else being equal, gold prices tend to move inversely proportionate to the value of the US dollar. Meaning to say, if the US dollar drops, gold tends to go up. Now, isn't that interesting? So that is one way to trade gold and silver. Now, when it comes to gold and silver, Kirsten, when it comes to, okay, I'm just a bit distracted with the questions coming in, sorry. My idea, or rather my opinion, don't trade both gold and silver. Then you're just ramping up your risk because silver tends to move in the direction of gold, okay? So just focus on one. Anyway, you don't have so many fingers to be clicking, buy gold, sell silver and all. Just focus on one. Ultimately, our job or our aim is to make money, right? This question is by Christine. Why is the Japanese yen considered as one of the strongest safe haven currencies? This is a good question. Now, one of the main reasons is because of its very, very low interest rate. So in essence, well, if to be more specific, right, the Japanese yen is considered a negative interest rate right now. So this is one of the main reasons it is so safe that if you put money in a Japanese bank, you actually got to pay the banker at the end of 1 year when you take out your money. As an example, you put $100 in a Japanese bank, at the end of 1 year, you withdraw back $99. So the main reason for this is that, you know, everyone is saving. Everyone thinks the Japanese yen is a safe haven. It's not a country where you can make a lot of money. It's a place that represents a lot of safety. You know, Japan is still considered a developed nation, although they are struggling with deflation at this point of time. You know, Shinzo Abe has been trying to get Japan out of deflation for like the longest time, and it hasn't been happening. So that's one of the main reasons that Japan is considered as a safe haven. And because of that, right, if you know, any catastrophe happens, another one I'm going to give you now, if Deutsche Bank were to collapse, you will actually start to see the Japanese yen skyrocket, because money then starts to move into safe haven assets, right? This is Trin's question. What thing do you use to move your SL to the profit area? Basically, well, I hope I'm getting your question correct, Trin. So essentially what I tend to do, I just basically manually move. You can do it in two ways. You can basically modify your order. You can right click on your trading platform, click modify order, and key in the new stop loss. Okay, that's the first way. The second way, you can employ a trailing stop. For some reason or another, you know, for 10 years, I never had the habit of using trailing stop. So for me, I tend to use a manual alteration. Now, in terms of where you should be shifting and tightening your stop loss to, I hope this helps you. Once a trade goes in your direction, friends, the first place that you should be tightening to would be your entry price. Then in which case it becomes a break-even trade. So as an example, if you click buy and you know you put a stop loss, say 30 pips below, once the market moves in your direction, meaning once the market starts to move upwards, right? Your first place of tightening is to modify your stop loss to reflect the same price as your entry price. Okay? Michael's question, Michael C. What indicator do you use? Well, it's a good question, and I will take a bit of an extended answer for you. I hope this helps you. Do not ever end up trading the indicator. This is I'm going to start saying this because the problem with most traders is that, you know, when you don't see a trade, what will happen is that you tend to slap on like 10, 20 different indicators, and you'll end up trading the indicator. Trading the indicator meaning to say only when an indicator gives you a signal, then you enter. You see, indicators can always give you false signals because primarily they are lagging in nature. Lagging meaning to say only when the price occurs, then you know, the indicator gives you the signal. So by nature, it is already late. The job of the indicator is to only confirm what you already see. So, you know, a better question would be, friends, is that you need to actually start to learn how to see or read the story that comes out at you. All right. So having that as a basis, Michael, what is I use the RSI and the stochastic when trades are moving in a range. And I tend to use either moving averages, well, mostly moving averages when they're moving in a trend, because it's very visual. It helps me to see a lot. All right. So the answer for you is when the charts are moving in a trend, I tend to use moving averages. When the charts are moving in a range, I tend to use oscillators like the RSI or the stochastic. John Waukie's question. Mario, where do you see gold price to be if Donald Trump wins? Well, you know, if Donald Trump wins, the dollar will crash. You know, as in the US dollar will drop and gold is going to shoot up. All right. So if gold shoots up, it's going to shoot up anywhere above the, definitely above 1,300. You know, definitely. Currently is at 1,286. All right, 1,286. My good friend Leonard is online. So Leonard has given the World Gold Council link. It's www.gold.org. Thank you for that, Leonard. Okay. Kristen's question. Yeah, answered that. Okay. Any recording for the webinar? Is another one of our long-time advocates, Chin Fei. right? Yep, definitely the webinar will be recorded. Okay, I think the team will be basically sending it out to you guys, or you know, once you guys open up your live account, you can basically access all the past webinar recordings on Fullerton Suite. Fullerton Suite is basically the back end that we've built for Fullerton Markets. Okay, so well, I hope I've answered most of these questions. All right, friends. So thank you so much for joining me on this webinar. I hope I answered your question, Chin Fei. So essentially, the webinar recording can be accessed on the back end of Fullerton Suites. Okay. So at the end of this week, I know I'll be definitely watching the election as well. Join me on Fullerton Market's page. I'll be doing a Facebook Live recording on Wednesday at about 8 p.m. I hope by that time the results are out. Then we can, you know, start to look at the charts a little bit more. So just please always keep in touch with Fullerton Market's page, Facebook page, and my own personal page on Facebook. Just search for Mario Singh page, the one that has like about 30,000 fans. Go there, click like, and I'll probably give you some updates when I'm in New Zealand as well at the end of this week. All right. Thank you so much, friends, for spending your last 1 hour with me. I hope you enjoyed it. I hope I didn't lose my touch. You know, once in a while, I do like to surprise you guys by doing the webinars myself. I really hope I have added a lot of value to you. You know, if you guys enjoyed me doing the webinar, just type a huge yes, you know, just to give me some feedback. All right. If anything else you guys wanted to know, just type on in the comment box, and I will probably save the questions again. Okay. Friends, thank you so very much for joining me. This is Mario, CEO of Fullerton Market, signing off. I hope to see you on the Forex Highway. Thank you. Good night. God bless. And let's trade the US election together this week. All right. Bye-bye.